And it is Sunday, March 30th, 1:30 p.m. Eastern Time. And we are going to have a great video today. We got some important things to share. First, though, let's look at Friday. What happened Friday? I've created a spreadsheet that just shows it a little bit better view. And this is basically what happened Friday. Um, the first trade I made in the morning, this is the 30-year Treasury bonds. Basically, what happened was there was the most important report right now, which is the inflation report, comes out at 8:30 a.m. And I was waiting to see for any movement, and there was literally nothing. Like nothing moved off the directly off that news report at 8:30. So I didn't make any trades, and just watching. But normally those economic reports will affect the bonds more than any other market. So that's why I was watching them. And frankly, I was watching them for one specific reason, and that was to see if they would go up. Why? Because they've been down for a couple days and they had already been going up overnight. And it is short covering Friday. So here's you see it broke these lows, so we know a lot of people are getting short, but there wasn't a big flop down. Um, this is the sort of thing when you break out these lows and you have this sort of big momentum day down like this. We just didn't get that, and we can see a wick at the bottom. So, anyways, doesn't surprise me. It shot up. This is the daily chart. So yesterday, that's the whole day's move. Now drilling down, can look at it a little bit closer. Basically, what happened. So if we go back to about 8:30 in the morning, and it had already come up this far overnight. So we're sitting here at this ledge. But on a short-term time frame, this is a pretty good little box here, pretty good little flag. And basically, it was pushing against that point, and I thought, well, this is a good big time short covering opportunity, and may move higher. So that was basically it. Um, had in the back of my mind that it could move higher off that. So just to draw a little mini rectangle here, started about right here. So you just had this thing. So we're just sitting here. Here it is, 8:30 in the morning around here. And basically it continued higher. So I bought it when it broke higher. And it just sat here and it sat here and it sat here. And I ended up basically selling most of it at some of these top prices, 20. Put my cursor around it. So I literally bought it at my average price was 15. So this was my average price. Bought, and this is my average selling price. You can see what a small little move I caught. Tiny move, 5 ticks out of 32 on the day. So it's 32 on the day. Let's see how many I was actually. Um, yeah, so tiny move, and that was $6,000. The Nasdaq, tried to make a quick trade in it off. I saw some volume pick up at 9:10 a.m. I don't know the reason why, but somebody was gunning the market. It's literally just tape reading, which is incredibly useful and accurate if you get used to it in NASDAQ. And actually made money on the first trade, but lost money on the second. So, anyways, this is the idea. Just cut your losses quickly. Take small losses, make bigger gains. And the copper, I put in the wrong month. It was getting some momentum off the NASDAQ too, and I would have lost a little bit of money anyway, maybe half that, but I put the wrong month in. So that's super important lesson also. I've learned that my whole career is don't make order entry error mistakes. Just the spreads on some of these illiquid months will cost you thousands and thousands of dollars. So I traded the June contract instead of the May contract, so that cost me. Probably loss would have been half that. Anyway, net P&L for the day, $742, basically flat. It was a know nothing day. It was a Friday. But the main point that for myself, that I need to remind myself about Friday, I'm just getting back into trading. I haven't done this much. And, you work for a couple hours at night, you get up early in the morning, you work for several more hours. I've just learned you can't stare at the markets all day. You'll get exhausted, you'll begin to hate your job, and you just won't want to trade. So I try to manage myself, but, you know, we had this huge move down, and I tried to trade in the morning. I didn't see much happening. It's a Friday, sometimes volume is lower. But if you get a big pickup later in the afternoon, it could be big. The other thing that I always keep in mind, near the end of the month, and so you have a lot of capital requirements that have got to be met, and a lot of other things going on. So, um, just watching this market, I, you know, went to the gym, called the morning off, and then wasn't until after the market opened. Most of this move was between 9:30 and 10:30 in the morning. I really had at least at a minimum, watch the market until about 10:30, 11, because there's usually some sort of change of tone around 10:30 in the morning when Europe closes and French closes out their trade. So, and sometimes there's a change of character. But anyways, I missed this out. The main point being here, I'm just trying to get my body in shape, and it's really it's like you're being an athlete. You're really working on yourself. You learn all these about the markets and how they work, and then after that, you keep working on yourself, observing yourself, making sure you're in tip-top shape. And I'm just, I'm in decent shape physically, going to the gym and stuff, but I need to make sure I'm 48 years old. I need to make sure I'm in tip-top shape. I don't get tired. I don't get impatient. Just observing myself and my own feelings while I'm trading is super important, how I feel. So that's the big thing. If I had been around, I could have made 10, $20,000 in this move. So it was just me going to the gym. I mean, I know I need to go to the gym and get in better shape, and so I was doing that. I probably should have waited another hour or two. Um, anyways, that's the point. Um, okay, so enough on that. Other than I've got this new stat sheet. Basically, I've got the whole month of April. So we started March 27th. I'm gonna trade all the way through April. We'll do this for a whole month, and this will just to be to demonstrate. This is consistency. We have our winners and we have our losers, and we'll get a full stat sheet. What's the net P&L? Average winner, average loser, percentage winner, percentage loser, and that way by then we will have made hundreds of trades, and then it's just indisputable. You've got enough statistics to show after a month of trading that this body, this person has been engineered into a trading machine and can pump this out consistently, day after day, week after week, trade after trade, so that there's no, oh, you got lucky for a couple days. Well, you can't get lucky. If you make a thousand trades, it's like flipping a coin. It's always going to revert back to 50% or, you know, whatever that is. So we'll demonstrate for an absolute fact that this is no joke. All right, so we're going to keep track, and we can show this every day. Um, Done my homework for Monday morning, and again, Nasdaq huge day down, S&P huge day down, and those old lows from last week are like very close for the Nasdaq and a little bit further away for the S&Ps, but it's highly likely that this market will break major lows this week. Um, and then the other thing to keep in mind is Monday is the last day of the month. So knowing that these funds, basically the idea behind the end of the month is the biggest funds want to show on their P&L their clients, they're short the market, or they're doing this or they're doing that. They're doing the right things, and so there's usually a lot of follow through the last couple of days of the month, and I didn't realize the extent of it, but because the market's been down this week, the extent of this. damage on Friday. I should have been more prepared for that, all that volume. But yeah, so basically S&P's, Nasdaq's, basically my comments is Nasdaq is close to a major low, making the way down, making its way down. It may have a strong short covering rally. I bet you Tuesday, because I think Monday might be either more follow through or positioning. Tuesday, first day of the month, suddenly now the market's going to rally back uh, for a day or two, and then I think it will may go lower. But anyways, that's not important. What's important is to follow it day by day. Crude oil market gets really ugly. I do think there will be some pressure on the crude oil. Big hedge funds, they're always hugely long crude oil. For some reason, they just always own a lot of crude oil. So they have to sell and liquidate. If they're losing money in other accounts, they've got to liquidate other holdings. Gold leading the way higher, still super strong. Again, that's pointing to weak economy. Silver and copper are both normally trade. Copper's like trades with the economy, with the stock market. If the market's going up, copper will go up, and gold will do the opposite. And gold is more like bonds. Market down, bonds up, gold up. But when things crash, the gold will temporarily go down and weaken because these same hedge funds are holding gold and they have to liquidate their gold as well to cover capital requirements. So that can start to happen, but that's not until we get to a critical stage where there's an absolute market crash. Right now, gold, they're going to continue to pile into gold. Soybeans, so, but market, soybeans market, why I'm interested is because it's a seasonal thing. This is a seasonal market, and we're gonna usually so right now we're weak going into April. Usually there's a lot of market pressure from Brazil's soybean harvest, which is like the end of their summer, is like February, March. So they're harvesting, there's a lot of market pressure. Then pressure eases. Then we go into our growing season, which is coming to the summer, and then the risks of a poor crop due to weather concerns start to go up, and then it shoots up into June, and then it does the same thing. Once the crop is okay, then it goes back down. So here's a daily on the soybeans, and I'm just looking at this and expecting it's just good to get yourself positioned for potential seasonal weather trades with the soybeans, and they're leading the way up. Soybeans and corn are the summer crops, whereas wheat usually goes down all the way into June, usually bottoms in June, July, and turns around. It's because we actually most of our winter is planted in the fall. It lives under the cover of snow and then gets harvested in early spring. So it wheat's got a little bit different than what you expect. But just looking here instead of the daily, just the weekly, just a longer term thing. So we haven't really had a good rally since, you know, 2022. You can see. So here we are in June and it collapses, rallies into June and collapses. That was, 2022, 2023. Here it is, May. We go into July and looks like that was a little bit stronger year, but eventually it collapses. That's sort of the idea. Here it is, March 1st. We have, it at least holds its strength in 2024, and then once the crop is secure in June, it collapses. Anyway, it's just an approximate thing. So we're just looking for now we're at these lows and just saying, hey, there's a potential for a little bit of a run, or at least holding its ground. This was coming off some strong years, so maybe we'll bottom and get a little bit bigger run this year. That's all it is with soybeans. Just watching for an entry point on these daily charts for a potential move higher. But it's if it wants to do that, it'll show itself. So that's a market review. Next topic. So stepping back from like currently what's going on right now, and to give a little bit different, little bit bigger idea and sort of perspective on the work, you know, you got to learn how the markets work and you got to learn statistics and all these sorts of things, but it's really about keeping yourself. It's like you're the tool. It's like It's like if you're a construction person, you keep your hammer and your pickaxe and all your equipment in good working order. Um, in trading, yes, you have to know how to read charts and markets, but people are so obsessed with doing that, they don't realize themselves it's their own personal attitudes that end up making choices and decisions in the markets. And eventually, you can make and believe a chart is saying any message you want, and in the end, you're just gonna be yourself. And so it's really about personal development. So this is a great this book right here, and this book is called. First of all, it's just super old. You can look at the print. You aren't going to find this online. This is a gem. I've got it saved on my Dropbox and my Google Drive because I don't ever want to lose this. This is just an old school book, but it's written by, there are so few good books on Amazon about trading and everything else. There's like, I can name like the three or four that are worthwhile, where they've got people that have made the money and and they're actually showing you trading strategies that work. And this is one of those books. And this guy, Toby Crable, lives in Los Angeles. He's a billionaire and blah, 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 blah. And he wrote this book. I don't know when this book was written. You could just look by the type. I can't, there's no date at the beginning of it. So, but I'm sure it's, super old book, probably the 80s or something. So, want to share with you his introduction, which is just exactly what I would say. So, he just says how this book developed. He studied opening range breakouts, short-term price patterns, contraction and expansion, integrates all those things and other useful patterns. Okay, so he's sharing real statistics about real tendencies the market makes. But this two paragraphs here is really the gem I want to share with you. The purpose of this research is to determine tradable market tendencies. They're tendencies. They're not the full cause. I don't know what the full cause is. I began with the premise the market followed mechanical laws, but have since learned that's not the case. We're not omniscient. The purpose of statistical testing is to derive general principles rather than specific applications. They're incomplete. So, though I've made extensive use of statistics, my focus not on this. But as a trader, my purpose is to develop a framework for understanding the market. The statistics provide an indication, but only can be integrated by an understanding of the market. In other words, get all these statistics together, but as a trader, you got so many other things going on. Yeah, what's the latest news? What are the economic reports? What are what day of the week is it? What day of the month is it? What time of the day is it? All those things that you learn. Um, what's volume look like? Where you can't just trade off price patterns. You realize, okay, it's the patterns, but then it's the volume, but it's the time of day, but then it's the short-term patterns and the long-term patterns, and all these things that no computer could ever capture. Only a human being is capable of all this. But anyway, so my work and my job as a trader is not to sit here and think that I'm going to create some miracle automated trading system where I can just retire on the beach and make money. But my job is to work on myself and just continue my understanding and learning, which never ends. So the idea is this book right here, I've thumbed through it, I've read it, I've done a little bit of work in sort of analyzing it and reporting on it, but I really need to do a deep dive into it, read the whole thing carefully, put together, take some of his statistics and integrate them into my thinking and into my trading so that I get even better, so that I can learn even more. Um, he's got so much good stuff in here. So just for example, formatting this book is weird, but just for example, this is the kind of stuff he does. So he just makes these trades. He says, okay, if these are pluses and minuses. So this is if the 5 days prior to uh, the current day, it was up, up, down, down, up, then, uh, you know, what do I want to do? Um, So I want to B means buy. So if I buy after it's been down, down, up, up, down, up, up, down, down, up, I buy. There's a 63% chance that if I buy on that day and sell the following day at the close, 63% chance that I'll make a profit. And out of 112 trades, this was the average winner was this amount, the average loser was this amount, and then net profit was 3,000. You know, if I was up 5 days in a row and I shorted it, and I made 132 trades, I was right 50%, 57% of the time. Um, and here's the gross profit off of those trades. And so it's like getting all this information quantified, you can't memorize this whole table, but just the process of analyzing this sort of thing, um, and doing some homework, understanding what he's saying and what he's learned. That's the work of a trader. So that's just one example. So if I gave myself, a couple of research projects, that would be one. The second one, so here, for example, we've got this Bollinger Band trading system, which is the most profitable automated system historically. So if I go on here, I'm just gonna um, turn this on, and I think it's still, it, I think I fooled around with it. Yeah, it looks like I fooled around with it, but anyways, we'll see how it did. It's gonna this was making $180,000 every 6 months, but I've fooled with the parameters of it. So yeah, it's losing money right now. But basically the idea of this thing, as you can see, is these white lines, but buy when it crosses below, sell when it crosses above. So sometimes if the market's in a downtrend and it tries to buy down here, it gets out at a lower price. So sometimes it's a winner, but this is the idea. Buy when it hits the bottom of the range and comes back through. So that way, if it's just shooting up, you don't get short too early. Wait for it to come back through here and then sell it when it goes back through. So you can see these blue lines mean it made money on these trades. So this particular strategy, for example, I know that it can be improved upon by the simple fact that I know when markets have a strong day in one direction, they usually close at the extremes. So, for example, this trade here. Oh, no wonder this is soybeans. We've got soybeans up here. Let's try NASDAQ. This should have some. Yeah, I wouldn't trade soybeans on this Bollinger Band strategy. Never. Yeah, it just doesn't work for soybeans. It works great for the NASDAQ. But I messed with the parameters. But I think that even though I messed with the parameters, it's such a solid system that this will come out profitable anyway. But I've got so much data plugged into here now. It's taking a minute to load. But this goes back a couple of months. All right, here it comes. But the idea here is that so we have these up days and down days in this rotation, up and down and up and down. And that's what this system does. So a very simple little research project for me would be, okay, let me just go through historically and let me just find out the exact amount of hours on average that it takes for it to go up and down and up and down and up and down. I did that before, and I think I came up with like 2.5 days was the true rotation. So okay, you could see it actually makes money going up, but like I said, I messed with the parameters. If I actually run the test, I could run the test in front of you, but it takes like 10 minutes. But anyways, the point is that if I just so you could see here, like for example, it's shorted here, but all you had to do was wait for the end of the day, you know, instead of pretty much even that would just improve. And then identifying when you're in this big short-term sell-off, so you're just not going to be buying, you're only going to be shorting. and you're going to a trend following phase instead of trying to buy these dips. This was a big sell-off that took place over the course. It's hard to see here. You see all these bounces of up and downs, but if you look at the daily, this is what was happening. So this went on for 2 weeks. So you're not going to be making any buys. This is huge profits. You make more money reshorting this. It still has this 2-day rotation. 3 days down, rotates up for a couple days, down, rotates up, down, rotates up. So you still have these great opportunities to get short on these rallies, but you're not going to be ever buying anywhere. Um, and then cover your shorts when it comes down. So it's a rocky road down. But yeah, that's the idea. Is you can just improve on the system alone just by using some common sense of market tendencies. What day of the week is it? What day of the month is it? What's overall happening on these longer term daily charts? Um, so, but yeah, figuring out what I need to do is need to run the test on here again, so it gets optimized again, and then go through and look at every buy and sell signal and just say, okay, the every top and every bottom, and just go through it and just say, okay, what is the true time frame? And then if you say, oh, wow, it's 2.2 days, which is, I think, what I determined it was before, 2.2 days. Well, it's changed over time. Now it's 1.8 days, because, it was a couple of years ago I did that test. Well, it's 1.8 days. Oh, wow. The rotation in these markets is faster, which I would expect that to happen since the markets just get more and more efficient over time. But yeah, just doing those sort of studies. And then just for a third example of a little a project I have is, if I look at this chart here, you can see this automatically draws these little formations. And I've just noticed, there's a trading strategy would say every time it breaks out one of these little formations, put a stop in. Like, okay, you've got this formation. Whichever side it breaks out of, you short. So you short, it comes down here. Okay, you made money on this one. You go long, okay, this is a loser. Okay. You know, so I don't I don't know that there's a lot of possibility. I know that if I program this trading strategy that it makes a lot of money. Um, just these little breakouts, and then you just keep a really tight stop. You just in this type of strategy, use a really tight stop. But what I have noticed is that when you get a lot of them in a row, like you start seeing 3 a day, you end up you usually it's precursor to like, okay, markets are quieting down, and then you get a big breakout coming up. And that's sort of what happened. You had these three tight ones during this day. It was just a quiet day, and sure enough, what the next day is just this big, huge rally down. Not only that, these are great, literally, okay, here's your first leg down. And now one of these things pops up. Okay, well then there's your next leg down right after that. One of these things pops up. Now, so it's not that you want to trade coming out of this thing, but it's just hey, look, things have quieted down a little bit, and then there's a breakout. Again, since the market's having a big down day today, you just assume a breakout's going to be down. Well, yeah, it pops up a little bit above, and then there's your next leg down. So that's just then the end of the day. You know, okay, this thing starts to form at the end of the day again, and so it's just as giving you an indication. The market is contracting, volume's getting a little lower. You know, you know, this is towards the end of this is these they happen in the afternoon. Then okay, well, but this is between 1:30 and 2 in the afternoon Eastern time. So quiet early afternoon, just as would be expected. So you could probably ignore this one. And then the end of the day, this market closes near these afternoon lows. You have a consolidation, you have this other consolidation, and then boom. So um, finding out how these things can be more useful, but they do seem to show, contraction, and these sort of patterns are going to show up on, some of these oscillators when the oscillators tighten up. I have other indicators that show it as well. Um, I don't know if it's on here. Yeah, this one's not on there, but yeah, I have other indicators that show expansion, contraction, and it's the same idea, you know. let's just see if got this one here. So Bollinger Bandwidth is the one. So this just show, okay, we've been contracting for a little while. Okay, time for some sort of a rally. And then we have a rally, so this is just sort of showing, sort of preparing you once it gets down here, it's usually preparing for some sort of a big move. It stays down. Um, but best, it's best to just sort of wait for it to come down. Big move, you know, big move. So this shows a big move. And then it's just showing that ranges are contracting. You have these bigger bars, and then, okay, these little bars, maybe it's still moving down, but the bars themselves are smaller, is sort of what it's showing. And it starts to move down, and you get down here, and then the bars expand, and it goes up. So I have other indicators that sort of demonstrate that, but that's the idea is doing a little bit more research into expansion, contraction, and using those to time the market. It's not just about breakouts, it's about, being prepared for when it could be a big one. But look at this thing. Look at how small these ranges got and for how long they were these small little ranges, and these peaks are just hardly anything. When it rallies, it's hardly getting up high. And so you have this going on for days, for weeks, these long periods of time where these ranges of each individual bar just get smaller and smaller and smaller. And what does that lead to? Boom. Is big sell-off. So again, that's sort of how it works. You got rotation between expanding bars and contracting bars. So you have this big expansion, and then what follows? A lot of rotation, then a bigger expansion down. You can just see that's the idea. And I bet if I pull up the Nasdaq recently, you know, so it'll show that, right? So I probably have to show it on a longer time frame, but you know, same idea. You you expand, have this big move up, you go sideways, you contract, and then you get your big move down, and then you contract, and you get your big move down, and it's the same thing as, these are really, I call these rectangles, they're just these little flags. This flag, this sideways movement shows, this decrease in range, bars get smaller, and you end up over here, and then you get ready for your big breakout. So you say, oh, it's been down here. We're breaking out now. It's probably a good one to trade to the short side. So, anyways, that's another example of project of just timing, expansion, contraction, and timing this Bollinger Band system that we have programmed in that buys and sells, and say, okay, now I know the average holding time is 2.2 days or whatever, and the average contraction time and blah 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 blah, and then we just say, okay, well, I know what the averages are, I know what statistically they are, and I put those into my brain, and it just makes me a better trader. And I keep thinking about those things and forget about all sort of stupid conversations about, oh, is the market going up? Is the economy getting better? Is it getting worse? And all these stupid conversations people have about trading, focusing on these statistics, and the statistics are really bearing out, telling you about human nature. If it tells you it's 2.2 days, then I can probably tell you that in rotation, then I can probably tell you that human beings every 2.5 days go from happy to sad. From I can tell you, okay, if it's 2.5 days, I'll tell you, okay, universally, of all people in the world, they go through 2.5 days of depression and 2.5 days of enthusiasm, and 2.5 days of depression. And that's just a worldwide phenomenon. That's sort of, whether that's true or not, I'll never know. But that's just sort of the idea. Is it tells you about human nature a little bit. So, anyways, a little bit of update and a little bit of ideas into sort of the job and how it's just a different job. It's just you're always working on yourself and educating yourself and keeping your mind focused on statistical edges and tendencies that evolve over time. They're always changing, and you keep doing these studies and say, "Oh, well." The market's rotating quicker. Oh, well, the market's doing this, the market's doing that. And oh, the market's in a downtrend, so let's adjust this system or that system this way or whatever. And always evolving, always staying in tune with the markets and um, trading like an educated, well-educated, like AI, like artificial intelligence, like a well-educated machine. All right, signing off.